Okay, we're looking at NYMEX crude. We're starting with the December 2017 contract, which doesn't expire for another year. The reason we start with this contract, we want to show you the 144-week cycle on a contract that'll still be trading a year from now. Um, so if we start from this high, May 2011, to what could be a higher low here in mid-November of this year is 288 weeks. And from this low back in February of 2014 to mid-November of this year is 144 weeks. So every 144 weeks we get a change in trend, not a small one, a big one. And I think it'll be a higher low setting up a rally to follow. Now, this fits in with what we see happening here of what looked like a breakout above the monthly Gann line is now giving it back and is closing below it. It's 48.27. You close below that today. That indicates a false breakout and a fast move down. I don't expect new lows. I think this 7-year low to low cycle gave us the secular low back in February 2016, but you could get a sharp sell-off to 43, 40 area by the end of this week or early next week. Now, the reason we're not looking for a new low, as we told you, we had the important secular low back in 1998 in sync with Neptune square Saturn, an important aspect of two outer planets. Same pattern, same aspect came due here in late January 2016, and it gave us another secular low. And as I just mentioned, we had a 7-year anniversary low to low from February 2009 to February 2016. That combined with that planetary aspect and another planetary aspect, Pluto square Uranus. If you look here, this particular aspect tends to give us lows, and it did so again here in February 2016. And we look at Saturn gave us the low in price. So as the aspects gave us the low in time, Saturn, this planetary line, very important line of support, it gave us the low in price. So that was just further confirmation that we had a secular low early this year. If we go forward, you can see there are a lot of just fixed Gann cycles. 30-month, 84 months is 7 years. 90 months, you had 48 months. These are all nice anniversaries of highs and lows that suggested a turn, and we did get one. Now, we're selling off hard today. I think you'll be down at this 46, the 270-degree line on the static square of 9 at 46. You'll get there soon. There's also a 200-day moving average at that level. You close below that area, you will go down to 43, maybe even lower to 40. And that could be a fast move down. You may get there by the end of this week or early next week. So keep in mind, we know that this is a big sell-off, but we also know it's unlikely to make new lows. We're going to get a sharp move down this week, and then you should be looking at next week as a time to consider this market from the long side. Let the market crash and burn, and then when it starts to move back up again, jump on board quickly, because it's likely that you're setting up a major important long-term low here. It's a higher low in sync with that 144-week cycle and the 288-week cycle. This is probably going to be a very important low, an important higher low for WTI.